Welcome to the channel, guys. My name is Jess. So in case you missed it, Monday was an absolutely insane day for the cryptocurrency market. Bitcoin dropped over 15% within a 24-hour period, and this was at the tail end of what has been an over 25% move downwards in the last 4 to 5 days. Over $1.5 billion in longs were liquidated within that time frame, and the crash has put into some massive concerns about the future trajectory of Bitcoin and the end of the bull run. So let's dive into today's video to unpack all the recent price action, the potential causes for it, and what it means for the future. Before we jump in though, make sure you guys smash that like button and subscribe to the channel to get regular Bitcoin analysis every Monday, Wednesday, and Saturday, and ring that notification button so you never miss an episode. If you're after even more content, be sure to check out my free Telegram channel for daily updates and crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trade setups with exact entry points, targets, and stop losses. Alrighty guys, as per usual, before we dive into our analysis, let's go ahead and talk about what on earth has happened in the last couple of days. So honestly, so much has happened that I barely even know where to start, but let's go ahead and talk about, first of all, where we were at in our last video. Where we were a couple days ago, I think it was last Saturday that I made my last video, we were retesting our 200-day moving average, right? Which I explained as a really, really key level, a really crucial level for us to hold unless we wanted to see a range low retest. If we move over onto the 3-day chart for the Ichimoku as well, we were testing the baseline on the 3-day chart, which again, another really critical level for us to hold, which generally when lost in coincidence with a structure such as the bull market uptrend and our horizontal 60k support would generally lead to a much larger correction to then retest the leading span A. So that's pretty much exactly what we saw, guys. So after losing that baseline, after falling below the midline of our Gaussian channel as well, which was another thing I spoke about, we moved then to move all the way down to $55,000 and create a range low retest in the macro structure of Bitcoin, right? Which is this descending channel that we've been in for the last 4 to 5 months. So upon the retest of that descending channel, what we also did was flash below $53.3 thousand, which was this bearish trigger point we talked about. And upon the loss of that bearish trigger point, if we move over onto the weekly chart and pull up the Ichimoku as well, we can see that would mean the loss of the baseline on the weekly chart, which would again lead to a move to this level over here, right? This baseline level, no, it's not baseline, sorry, leading span A level at $49,000. So that's why we flashed it. So we had this massive liquidation event on Monday, and a lot of that was caused by, external sort of like economic factors. We had in the US, we had unemployment data come out, which was quite negative. It was above consensus, and generally just kind of was showing us that the negative effects of these delayed interest rate cuts are really starting to happen. They're starting to show in the economy. There's fear of a recession. Things aren't looking good in general. Like, they're not looking terrible just yet, but people tend to panic. And then on top of that, we've got everything that's happening in the Middle East, which we all know is not good for the risk asset market. And then in Japan, we had rate hikes. So that, I think, was also a really big catalyst for this event. And, when these things sort of happen and recession fears kind of creep in, investors tend to take a risk-off approach where, they're not going to be heavily investing into tech stocks, crypto, that kind of stuff. And so we saw this massive event, massive amount of liquidations. I think it was $900 million in long liquidations just in that 24-hour period alone in crypto. So it's absolutely huge. But the good thing about all of this is there is some conflicting information, but the good thing about all of this is we have closed above our macro structure. So this descending channel that we've had for the last 4 to 5 months is still intact. So structurally, Bitcoin still has a potential to move back up, to retest this range high over here and potentially break out. There's a lot more to be said about this analysis though. So before we get carried away, let's dive in and talk about this daily candle close and what else we need to be looking for on this 3-day chart. Before we dive into the analysis, let's hear a quick word from our sponsor Bitunix, where you can get 15% off all of your trading fees and up to $5,500 in setup rewards when you create your account using the link in my bio. Bitunix is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. Alrighty guys, so we know that the macro structure is bullish, okay? So we know that while we're above this lower trend line here that we've got in this massive descending channel that we've been in for the last 4 to 5 months, while we're above that lower trend line, we have that potential to bounce and test range high resistance, and upon that test potentially get that breakout in the future and continue on with that macro bullish trajectory that we've been waiting for this last 4 to 5 month period. However, from this daily candle close, we also know that we did lose a couple key levels. So the one that I'm really talking about is the leading span B on the Ichimoku. So on the 3-day time frame, guys, we know that historically that leading span B has signified whether or not Bitcoin is about to enter a macro downtrend or, continue on in that macro uptrend. It has historically been a really strong level of support. We can see here that, in that recent range low retest over here in July, it was that leading span B that we bounced off to facilitate that move all the way back up to $70,000 that we just, fell down from. So from that daily candle close that we've just gotten, we can see that we actually lost that leading span B level. Sorry, I'm all over the place today. Right, we can see that close was actually below the level here. And if we take a look at historical price action from BLX, we know that, the last time we lost that level, we entered the bull market, the bear market. Over here, we lost it after $60,000. We did end up bouncing on the weekly chart leading span B, but still, that was a 20% drop. If we go back to 2020, again, every time we lost that level, we saw a 50% correction, 30%, 15% correction. Over here, we saw a 72% correction. So generally, from historical data, we know that when we lose that level, we see anywhere between a 15 to 70% continuation, bearish continuation in the price of Bitcoin. So that really is something to consider moving forward with this price action. So while I know that macro structure is intact, it is definitely something to be keeping your eye on, guys, because it's not 100% confident. There's a lot to do with this bounce that rides on the upcoming interest rate data as well. So for those of you who don't know, the reason why we had such a nice strong correction at the bottom here and we ended up recovering so rapidly to get that daily candle close back above the structure, and you'll see it across the entire asset market if you take a look at S&P 500, you'll see the same kind of swoop back upwards. And a lot of that was caused by the recent development that we've had with interest rate cuts coming this September. So obviously they're not locked in yet, and that is why it's so risky, because we don't know. As retail, we don't get the news until the news comes out. So at the start of the year, we expected 3 rate cuts. Right. And so that's why, we had this massive rise in the price of Bitcoin. We reached $72,000. And then as the year progressed, we had no rate cuts. Right. So we slowly started losing that bullish momentum. Obviously, Bitcoin had a lot of rough stuff happen here as well. We had Mt. Gox, Germany, all that kind of stuff as well. S&P 500 did end up going up around this segment. But we know that we've been pretty much hinging. The market has been waiting for these interest rate cuts. And so after the recent events, with unemployment data coming out so negative, I have an article over here, unemployment data coming out so negative, and just the sort of like increasing probability of a recession creeping upwards, the new consensus is now, instead of getting a 25 basis point cut in September, people are now expecting a 50 basis point cut. So that expectation is being priced into the market. It was being priced in later on that Monday, and that is why we ended up seeing that massive flashback upwards and this reaccumulation and recovery in the market. But again, guys, until we get that news event come out, until on September 18, when we get the federal interest rate meeting and, it actually is a cut, we shouldn't really be, I wouldn't necessarily recommend, not that I'm giving financial advice, massively accumulating Bitcoin here. There is still a high amount of risk. And so now how we can kind of divide this kind of future price action is below $60,000 here. We're in somewhat a neutral territory. So we know that we're seeing a little bit of accumulation throughout the next month or couple of week period, right? That's going to take us to $60,000. And that is somewhat neutral, because until we're above the midline of this massive channel of consolidation and above our 50-day moving average, if we pull up the market cipher A and just pull up the 50-day moving average, until we're above both of those levels, we don't have a very high probability of getting that range high retest to begin with, right? Generally, we know above the midline, we get a range high retest. Below the midline, we generally get these range low retests over here. Same thing for that 50-day moving average. So until we're above that 60K level or even $63,000 over here, we're in a neutral territory. So that means that above that level, we are short time frame bullish. So we know that, okay, it will probably be much closer to that September period. Okay, and moving above $60,000, we know that the bulls have stepped back in to take a fair amount of control of the short time frame price action, and we have a much higher probability here of seeing that range high retest. So for that period, we will be short time frame bullish. Now below this level here at $53,000, that daily candle close, we become short time frame bearish. Short time frame bearish. Sorry, this is quite messy. And below this candle close over here, this wick over here at $49,000, we become macro bearish. Okay, because that is when, okay, we've lost the Gaussian channel, we've lost our macro structure, we've fallen below sell side liquidity for our range low, and we are already below that leading span B. Okay, so at that point, we know that we are definitely entering a high time frame bearish trajectory. And so that means that technically above this level over here, above $53,000 above our macro structure, we are to some degree macro bullish. Well, we just might be seeing those, shorter time frame corrections downwards before that range high retest. So that brings us into the short time frame analysis segment of this video, because if we know that 60K is that next key target that we have in terms of reaching our short time frame bullish case scenario, what sort of levels do we have on the short time frame that'll take us there? What resistances do we have? What are our bullish and bearish case scenarios? So moving over onto the 1 hour time frame, we can see that our key level of resistance right now on the short time frame is this next little green box over here. So 57.7 to $57,000. If you guys go back to the daily time frame and pull up the VIPV, you can see it really, really clearly. There is a peak right there in the volume profile, so you can chart it out using that. But what we can also see from that profile is that when we do get that close above 57.7 thousand, we have a volume gap. So that means that closing above that level should take us to fill that gap in the volume profile and move towards 60,000. So a break above 60,000 is obviously not going to happen unless we manage to establish this as a base of support in order to, facilitate that continual bounce and move back above the midline of the channel. And our current key level of support that we have on the short time frame is this level over here, so $54,000 to $53.3 thousand. Right, we can see it's a level of support because falling below that level and also this prior low in our short time frame uptrend would trigger a bearish continuation to fall below to the next key level of support, which is also our sell side liquidity level for that daily candle close, right? So that is this $49,000 to $51,000 level of support that we have here. Again, you can see that mapped out on the VRPV. And all of that would be triggered by the loss of that prior low that we have on our short time frame uptrend. So overall, guys, the short time frame is actually looking pretty good. In terms of that move upwards, that this uptrend is looking quite strong. We've got 3 points of validation. It's verified by the RSI as well, so we know that we're getting a positive shift in momentum. Even though it's not particularly steep, we are getting a positive shift in momentum, so it is a valid uptrend. And what we can also see is that we've actually managed to close back above and move above our 50-hour moving average. So that on the short time frame is pretty big. Because it was falling below that 50-hour moving average that ended up kind of starting this massive downtrend that we were in all the way from that retest from $70,000. So that's a good sign. It tells us that essentially on the short time frame, everything is looking like, it's headed in that short time frame upwards trajectory. So while we're in uptrend, trend is your friend until it ends, and so we should be going upwards. Now, in terms of short time frame immediate bearish continuation, we know that we have this level over here at 53,700, right? That little level of support as well as that prior low. But our key short time frame, massively bearish trigger is going to be that level there, so 48,900, where that sell side liquidity wick was for the prior range low in the macro structure, right, is going to be the major short time frame bearish trigger that we have here. Falling below that, we know that we're going to get a much higher time frame correction, possibly to retrace this the base of that support level, so we just delete all those drawings, we can see that the base of that support level coincides with this change of character level here on the liquidity swings indicator, and that is at 46.6 thousand. So losing 48.9, we should very likely then fall to 46.6, and below that we have our next level of support all the way down at $42.8 thousand, right? So that's when we really enter that macro bearish case scenario that I spoke about. And all of that's going to be triggered by that close on the short time frame below our sell side liquidity. Alright guys, that is all the analysis that I have for you today. If you enjoyed the video or you learned something, don't forget to smash that like button and subscribe to the channel for regular Bitcoin analysis every Monday, Wednesday, and Saturday. If you're after even more content, be sure to check out my free Telegram channel for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trades with exact entry points, targets, and stop losses. And if you are a trader, support the channel by signing up down below to Bitunix to get 15% off all of your fees and up to $5,500 US in sign-up rewards. I'll catch you guys in the next one. Bye.